Welcome back to the Daily Crypto Roundup, the show that keeps you ahead of the market every single day. Today we're breaking down everything you need to know, including Bitcoin holding strong above 91,000 despite low liquidity. A massive $15 billion options expiry landing tomorrow. Ethereum regaining momentum above 3,000. Bitmine making a $44 million ETH purchase. Macro tailwinds strengthening with an 85% probability of rate cuts in December. And analysts spotting the first signs of a short-term recovery forming under the surface. We'll get into all of it in just a moment. Before we dive in, a quick thank you to everyone who's been rating the show 5 stars. The support this week has been unbelievable, and it's pushed the show far higher than we expected. As promised, we're giving out 10 XRP to the comment of the week and 5 XRP to a second listener who left a standout message. The 2 winners today are LA Kings Ellen and Moonhead 483. Congratulations to both of you. We'll be replying to your comments later today to get the address you'd like your XRP sent to. For everyone else, don't worry. This is just the start. We'll be picking new winners every Friday, so if you want to be included, drop a quick rating and comment whenever you can. Even a single emoji counts. Now let's get into the top 10 coins. Bitcoin is sitting around $91,550 today, barely moving on the surface but holding a level that most traders thought would be much more fragile heading into this week. Ethereum is steady at $3,058 after reclaiming the 3,000 mark overnight. XRP is around $2.24, quiet but stable. Solana is trading at roughly $141.90 with no major sell-offs despite thin holiday liquidity across the market. Cardano is at 43 cents. Tron continues to hover at 28 cents, one of the most stable assets of the day. Bitcoin Cash sits at $538, Litecoin is around $86, and Dogecoin is at 15 cents. A calm board, but the stories under the surface are anything but calm. The biggest thing everyone is watching is the $15 billion options expiry arriving tomorrow. It's one of the largest expiries of the month and a huge reason prices have barely moved today. The market hates committing before a major expiry, and with Bitcoin hovering so close to the max pain zone, traders are holding their breath. Analysts at QCP Capital said earlier this afternoon that the market is showing unusual stability, given the size of the expiry, and compared the structure to the January setup that preceded a sharp upside break. Of course, nothing is guaranteed, but historically, when the expiry is measured in tens of billions, you almost always get a reaction shortly afterwards. The important thing is that the market hasn't cracked. No cascade, no panic, no wipeouts. It's almost eerie how controlled everything feels. That leads straight into the next story. Bitcoin holding firm above $91,000. And it's not just holding the level. It's doing it in a way that shows just how strong the underlying structure is right now. Exchange balances keep falling. Long-term holders keep absorbing dips. Even the brief liquidation dip earlier today was swallowed up in minutes, bringing us to the next point. Analysts pointed out that this bounce behavior perfectly aligns with what we've been saying for weeks on the show. Every sharp dip is getting shallower, and the recoveries are getting faster. This is classic pre-accumulation market structure, the kind of thing you only tend to see before bigger trends start forming. One analyst from MicroStrategy said today that Bitcoin looks as though it's coiling, and compared the current range to the period just before its 69,000 breakout in 2021. Different environment, different macro backdrop, but the similarities are there. And speaking of macro, the United States now has an 85% probability of rate cuts in early 2025, according to CME FedWatch. That's huge. It's the biggest single driver behind today's stability. Because when markets expect rate cuts, liquidity expectations shift almost instantly. You don't see it in real-time candles, but you feel it in the underlying bids. Everything gets a little more supported. Everything becomes slightly harder to push down. This is exactly what we're seeing today. Even with low volume, there's a floor underneath the market that wasn't there in the summer. Analysts at ING even said earlier that crypto assets are the most sensitive beneficiaries of a rate-cutting cycle, due to how tightly they track global liquidity flows. There's a reason Bitcoin didn't break down this week. Macro is quietly turning in crypto's favor. Ethereum also had a standout day. Climbing back above $3,000 wasn't a fluke. It was driven by real accumulation. And the biggest headline came from Bitmine Immersion Technologies, who bought 14,618 ETH, roughly $44 million worth, in a single purchase. That's not normal behavior for a mining-focused company. That's a strategic move, and it signals a shift we've been waiting for. Institutions gradually treating Ethereum the same way they treat BTC, not as a speculative token, but as a long-term asset. On-chain data backs this up. Wallets holding 10,000 ETH or more have increased for the third week in a row. Staking deposits continue climbing, and velocity on the network has slowed. All classic signs of accumulation rather than distribution. One analyst from Nansen said that ETH is behaving like it's front-running a major event, which could range from ETF expectations to scaling upgrades to simple rotation from Bitcoin profits. And we're going to take a very quick break for our sponsors, but stay with us, because after the break we're diving into the story that ties this entire market together. Why the analysts calling for a December recovery may actually be onto something, and how today's price action quietly supports their thesis.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Another story that ties into this is analysts spotting the first early signs of a short-term recovery. And this is where things get interesting. It's not the big coins leading the move, it's stablecoin inflows. Tether supply has ticked up again. USDC inflows into exchanges are rising. Historically, this happens before big moves, not after. It's liquidity preparing to deploy. It doesn't mean a pump tomorrow, but it does mean capital is flowing into the ecosystem. And smart money rarely moves without intent. This aligns perfectly with what we've told listeners on previous episodes. Stablecoins are the canary in the coal mine. When they drain, the market struggles. When they return, the market breathes again. And today, they're returning. That brings us to the lighter story of the day. The Bitcoin logo appearing on a SpaceX mission patch. It went viral instantly. Every cycle has a moment like this. In 2017, it was celebrities talking about ICOs. In 2021, it was laser eyes. This time, it's Bitcoin literally being stitched into a space mission. Does it mean anything? Not really. But does it capture attention and signal cultural momentum? Absolutely. These small moments add up. Now, picking up from that point, the reason analysts are leaning bullish into December isn't hopium, it's structure. Markets that want to break down don't behave the way Bitcoin behaved this week. You don't hold 91,000. You don't bounce instantly on liquidations. You don't see stablecoin inflows rising. You don't see Ethereum whales accumulating aggressively. All of these things suggest that the downside pressure is weakening. Think of it like someone trying to hold a beach ball underwater. Eventually the pressure builds, and eventually the ball escapes. You're seeing the early hints of that pressure right now. No guarantee, but the signs are there. Another positive signal heading into next week is the return of ETF inflows after 2 slow days. Not massive, nothing dramatic, but positive. This matters because ETF behavior is extremely predictive in this cycle. When inflows stay positive during low-volume weeks, it almost always means one thing. Underlying demand hasn't gone anywhere. Traders might be bored, retail might be distracted, but institutional buyers are still nibbling. And nibbling during a quiet week is often more telling than buying during hype. And before we close, there's one more thing that's becoming increasingly important to recognize. Something that doesn't show up in charts, funding rates, or on-chain dashboards, but absolutely shapes market behavior. Across the board, sentiment is shifting from fear to curiosity, and curiosity is one of the strongest early-stage bullish signals you can get. When retail is scared, they sell everything. When retail is euphoric, they buy everything. But the space in the middle, where people aren't panicking but aren't FOMOing either, is where the smartest positioning happens. You can see it in Google search trends ticking up for crypto terms, in Reddit threads becoming active again, in influencers restarting their content after months of silence, and in the number of new Coinbase and Binance accounts being opened quietly in the background. None of this screams, blow off top. It screams, re-entry. Even the traders who swore they were done with crypto after the 2022 collapse are beginning to creep back in, testing the waters, checking prices again, watching what Bitcoin does around key resistance levels. This matters because sustained rallies never begin with hype, they begin with interest. The kind of soft, steady interest we're seeing now. You combine that with the macro backdrop improving, the ETF flows stabilizing, the whales accumulating, stablecoins returning, and Ethereum getting its first real tailwind in weeks, and you have the ingredients of a market that's quietly gathering energy. It might not unleash tomorrow or even next week, but you can feel the shift happening. Crypto doesn't move in a straight line. It coils, it compresses, and then it moves fast. And right now, the coil is building. We'll wrap the show up on this note. The market isn't explosive today, but it's preparing. Everything that needed to break has held. Everything that needed to recover has recovered. And everything that needed to quietly strengthen has strengthened. It's a strange day. Quiet price action, but loud signals. And that's usually the sign of a market getting ready for movement. Make sure you're following the show. Make sure your notifications are on. And as always, we'll see you at the top.